It's been a really exciting 12 months for blockchain. We've seen big announcements like the creation of R3 and the Hyperledger project. We've seen it be very much adopted and discussed by senior financial services CEOs in places like Davos, and it's even been on the cover of The Economist. What I'm hoping that we can talk about with this group, though, is on the background of these raised expectations, we hear more and more people asking the question, when am I actually going to see blockchain impacting my business, impacting my daily life? And so over the next 22 minutes, we are going to explore the forces that are going to shape the evolution of that timeline with a fantastic panel. And with me here today, I have John McLean, VP of Global Blockchain Labs at IBM. I have Clive Cooke, Managing Director of Alliances at R3, and Peter Kirby, CEO and co-founder of Factom. Thank you so much for joining us, gentlemen.
Pleasure. Thank you.
So I want to dive straight into the questions, and I'm hoping that each of you can talk to us a little bit about what you think the single most important hurdle is that needs to be jumped over by the blockchain community before we really start to see that next wave of blockchain moving out of the lab and into production. John, let's start with you.
Okay, thanks. So, we've been running a lot. We're at the very early stages of kind of blockchain adoption. And I think what we need to see from clients is an understanding of the use case and business value. So clients are wanting now, they've done a certain amount of trial and experimentation. They want to understand what the use case is going to be that's going to drive fundamental value or change to them as an enterprise and as a business network. So I think that's really the stage we're at now, is what's the intrinsic value and business value proposition.
Clive?
Yeah, I agree with John that there's an awful lot of hype around the product at the moment, and we are at the very, very early stage. We like to say that we're at the sort of 1994, 1995 stage of the internet, but the implications and what came from 1995 to 2005 was so enormous that don't think that, just because we're at the early stage, this isn't going to deliver, because I believe it is. But we're early on, and I think the one question that I get asked more often than any other question is, so when are we going to have production kit that we can actually start utilizing? And I think you've got to be patient here. It's not a race. There will be things that, there will be false starts as well. And I think the reason, or at the time that we find that implementation starts occurring in a successful way, is when financial institutions are confident with the technology, confident that the problems that are trying to be solved will be solved by that technology. And the third thing will be acceptance, and that will be acceptance by users and the regulators, etc. So I don't think it's one single thing.
Peter?
Yeah, I'm going to echo exactly what John said. You got to figure out how you're going to make money, right? None of this means anything if it's just technology that sits in a lab. You got to come up with a real business case that either saves you a lot of money because you built a better infrastructure, or makes you a lot of money because you built a product that could have never existed before. And until you've got that path where the money is really obvious, it's going to stay in a lab.
All right, well, I think that leads us straight to the question of, when you look at the universe of use cases that get discussed with blockchain and with distributed ledger technology, and if we think about this as being comparative to the internet, obviously Netflix came out after a long series of much more simple to execute visions. Where are we going to first see green shoots happening here? Peter?
Oh, yeah, well, something actually John was saying. Internal use cases at single financial institutions, especially around audit and compliance stuff. The big banks are now being dominated by the regulatory section of them. If you don't do it right, you pay enormous fines. You have a ton of lawyers hired that you'd never had before. And blockchain's an absolutely perfect tool for that, because you write data and you never, ever, ever unwrite it. So you're basically building permanent audit trails and 100% auditability for any business process. And easy use case. Take your accounting system, give it a blockchain backend. Now you've got a permanent log of exactly what happened in your accounting system. Take your trade desk, give it a blockchain backend, now you know definitively what happened. So that's an easy process that you, everybody out in the audience who's got some application can put into place over the course of, an industrious month or two and demonstrates real value. That's a lot easier than trying to get multiple banks involved. Clive, you could probably talk all about that. But quick path forward, easy to demonstrate value, relatively simple to implement.
Before we dive maybe into the collaboration, John, is that something that you're seeing in the work you're doing in the lab?
So yeah, we see 4 kind of adoption patterns, and you can look at any of the clients we're interacting with. Their use cases all map into these sort of 4 use cases. And as Peter said, the initial on-ramp is this idea of a compliance ledger linking together multiple ledgers across an enterprise. You don't need any external participation. Next kind of use case we see is reference data. I don't need to tell the banking community about reference data and the volume of it across your organizations. And that gives you the ability to participate or play across your business network, but with something that is, non-financial transaction based. So we see this idea of a reference data use case. The next one is where you want to play with some form of asset exchange, but not with any monetary value. So we see people looking at corporate action around voting or dividend distribution, some form of document control. And then the last use case is the one that Nirvana everybody wants to go to, which is high value market, supply chain finance, settlement, et cetera. But there's going to be far more of a regulatory element we're going to have to step through. You're going to have a broad participation in your business network to see that adoption. So we are seeing people look at that, but they tend to look at areas that are not regulated or heavily regulated. So it's things like IPO markets, et cetera.
And so Clive, obviously R3 is built around the idea of collaboration between large financial institutions that's going to enable some of these Nirvana use cases. How are you guys approaching your thinking about the waves of delivery that we'll see?
Yeah, well, as you rightly point out, not only are we a collaborative group where we have 43 and growing members working together on products and use cases, but also we ourselves are a collaborative group as an entity. We work with the Linux Foundation, we work with other distributed ledgers themselves, and the network can only be the network if it's adopted by everyone. And the idea that a blockchain or a distributed ledger can be a distributed ledger amongst 4 groups, well, it isn't a distributed ledger if it isn't distributed. So it's a big deal, we believe, that the bigger the network, the more the success of the adoption of that network will be.
Excellent. So it sounds as though we're on a long but potentially productive journey. I've heard more and more people in this space talking about the risk of overinflated expectations. The words sort of a peak of hype have absolutely been used around blockchain. Are there things that the community can be doing to manage those expectations vis-a-vis the sort of long timelines we're likely to see in this space? John, do you want to kick us off?
So look, we're going to go through a fairly standardized, a technology adoption curve. We've seen it multiple times before. I think the question will be, what's the rate and pace and the timeline we're going to see for that? I would personally say it's moving quicker than, personally I expected. So we're already seeing clients moving things into production, running those very early experiments. I think the key thing for the adoption is going to be as quickly as we can to get some form of standardized interaction or some standardized capability. And if you look at the internet, the thing that drove that forward was a standards-based play for both internal enterprise and external. The code and capability we use on the internet and the intranet is the same thing. And I think that makes a fundamental difference. So I think the sooner we can get to some form of standardization, view around this technology fabric layer, I think the quicker we'll see the adoption, and it'll de-risk that transition.
And Clive, how is R3 working around this question of standard setting?
Well, again, the more people that are involved in talking the same language, the more likely that it is that language will get adopted. And that doesn't just mean, by the way, with R3 and its member banks. That means with everybody in the community. I think it's really important that people have a little bit of patience, and things are moving fast. They're moving in months, not years. And, you know, if you walk away from it in January and come back to the marketplace in June, a lot has happened, and a lot will happen. But again, there has to be patience. This idea that we're going to have distributed ledgers with multiple partners utilizing them by the fall of this year, which, you know, I've had people ask me, it just isn't going to happen. But it is moving fast, and therefore, any question about, is this just a hype? Yes, there is a lot of hype surrounding it, but there is no doubt in my mind that this technology is going to have a profound effect and will be utilized. And certainly some of the partners that we work with from the board down are absolutely committed to the implementation of this technology. This isn't a little experiment going on here with a, you know, let's get some of our geeky guys into a room and have an intellectual game of chess. Won't that be fun? This is coming, and it's going to happen.
Peter, you're an entrepreneur working in this fast-moving space where standards have yet to be set. How are you drafting your strategy going forward in an area where much of this is still in flux?
I'm not sure I agree with Clive's assessment that there's got to be standards before we do anything. Maybe I'm paraphrasing you, Clive. But the way that we built a lot of the existing technology that's on the internet, to draw that conclusion, or draw that analogy, is we played, right? We built some tools that worked, and we built some tools that didn't work, and you know, early on, people started, you know, hypothesizing about how to get to Netflix. But it took a decade, but that wasn't a decade of waiting around for the Netflix standard to exist. That was a decade of play and experimentation and finding opportunities to make a little money here and there. And then, you know, 5 years before we got to Netflix, we got to people trading stocks online. And, you know, vast amounts of money were made. So in the blockchain world, I don't ever see a world where we've got one blockchain. I always see it as a stack of technology. You know, you're going to have data architecture. Maybe you build that on Factom. I'd like that. You're going to have smart contract architecture. Maybe you build that on Ethereum. You have a storage architecture that maybe you build on MadeSafe, right? And you're going to piece together these different tools to build whatever the application you're trying to solve. Trying to do mortgages, it's going to look very different than trying to clear and settle loan swaps. What I can encourage all the people in here who are fintech innovators is to start playing, right? You know, these are technologies that don't actually have a really steep learning curve. You can start an Ethereum node in an industrious afternoon and be writing smart contracts, right? Really, really you can do that without a ton of technical knowledge. You can fire up a Factom node and start recording data that will never, ever, ever go away. And it's the play, it's the experimentation, it's the finding things that are interesting to you and then demonstrating how this technology can make that thing more valuable. That's the path forward. And by doing that, that's also going to teach us what the standards should be. They don't come out of, the internet standards didn't come out of you know, a bunch of people going in a locked room and cooking up for 6 months what the standards are. They came out of best practices. And that's what we're going to learn as an industry.
And so, very interesting. I think one of the things that we've seen, though, is that there's frequently this comparison of the internet used, but financial services is in a meaningful sense different from simply the open transfer of data. And one of those key differences is the presence of an intense regulatory regime. And so while we've seen some regulators come out and say that a similar principle of do no harm should be used in shaping the future of this distributed financial architecture, are there other comments that you would give to regulators or that you give to them when you speak to them now about how they can effectively be supportive of the development of this infrastructure while continuing to fulfill their role of social protection and insurance of stability? Clive, do you want to kick this off?
Yeah, I think this notion that the regulator is somebody to be feared in this space is absolute nonsense. The distributed ledger and the immutability of what's occurring on a distributed ledger and can be passed on to a regulator immediately rather than the old-fashioned way where every financial institution in the world uploads what they believe happened in a financial transaction up to the regulator at the end of the day, and the regulator makes sure that all those transactions match and that the truth is out there. A distributed ledger will just get rid of that because the trade occurs, and the time the trade occurs, the custodian, the clearer, the regulator are all involved at the same time. So any notion that the regulatory world is not on board with this is nonsense. They want it as much as anybody else.
John, does that align with your views?
Yeah, I mean, if you look at the regulator, they're dominantly worried about systemic risk. So, what we're seeing now is the regulators want to participate early. They want to be involved. They want to understand the technology objection. As Peter said, they want to run those experiments, certainly with their client set and the people they interact with. They do want to have a sense of de-risking as well, right? So a key focus for them is run the experiment in the engineering sense and see what those use cases are. So to that extent, I think London's doing, a very good job, with the sandbox environment, et cetera, encouraging understanding and where this technology is going so they can get early visibility of this technology.
Peter, anything you want to add on to that?
Oh, if I was a regulator, this would be my dream. 100% transparency, inability to lie. It's a powerful, powerful tool set. The other thing that's really powerful is you get 100% audit, right? You don't just run a statistical audit. You run 100%, every single data point, audit against that system. And you can run it in real time, to Clive's point. So it's a magical tool in a decade for regulators. And I guess what I would say to regulators is be patient, because the payoff will be so worth it. And if you get in the way, the technology will just flow to a sector with lower regulatory barrier. I live in the States, and frankly, our regulators suck. They're all wonderful people, but there are too many of them, and there are too many rules. And it's really, really hard to innovate in that ecosystem. So where do people go? Here, where it's safer. Or, and if the regulators get too overwhelming here, they'll find another place. So this is global technology, and it'll just flow to the simplest place to do business.
But I think a key point is, as you said, it'll flow to other industries. I know this is a finance event, but you've kind of got a bit of a head start because of the focus on this technology for longer. But we're already starting to see a ton of other industries looking at generic supply chain, pharmaceutical, automotive, government, all starting to look at this technology of a way of governance, control, management, improve visibility across the end-to-end process network. So, they're moving very, very quickly now, and you need to understand this is not just your technology from a blockchain perspective. It's going to be a very pervasive and transformative technology.
Excellent. So we're coming towards the end of our time, but I think that we have a remarkable opportunity in here in that we've gathered together an exceptional group of leaders and thinkers in the fintech space. So I guess I'd ask each of you to just very briefly comment, how can the community that we have assembled here today be supportive of bringing distributed ledger technologies to that next level? John, do you want to kick us off?
Yeah, I think we always stand there and say, run the experiment, engage. Clearly we'd say, engage with the Linux Foundation around the Hyperledger project. It's an open source, open standard, open community play. It kind of de-risks that experiment, but run the experiment, right? And we made a very conscious decision around helping and enabling clients to run those experiments because we are at that beginning. And as human beings, we learn best by doing. You don't learn to ride a bike by reading a book.
Excellent.
So run the experiment.
Clive?
Yeah, in a similar vein, I kind of agree. Get involved. We closed our books last November with 42 member banks from every continent, and 6 weeks ago decided that actually we need to open the organization again, and we're taking on further banks, insurance companies, we're taking on exchanges, we're taking on financial institutions around the world to increase the network. So all I would say is get involved.
Peter, can you end us in a sentence?
In a sentence, go buy yourself a Bitcoin, send it to somebody else. It's the simplest way to get familiar with this technology, and it'll take you less than an hour.
Thank you so much to this fantastic panel. Thank you to all of you. I think this has been a great discussion.
Thank you.